Hello friends, this is Chartered Accountant Omkar Gadgil, and today we'll be discussing the concept of the Place of Provision of Services Rules 2012 under the Service Tax. Now first let us understand what these rules are and why these rules are. Now the word Place of Provision of Services in itself says that these rules are going to deal with something about the place as where the service has been rendered or where the service has been consumed, that is to be taken into consideration. Now for what purpose? When we see in the earlier service tax before 2012 there existed two rules, that is the importation of services rules and the exportation of services rules. Now for what type of transactions these rules were? Okay, whenever it used to happen that any service has been rendered in a cross-border transaction from India to outside India, or rather I should say from the taxable territory to the non-taxable territory, then how the service was to be dealt with, that was a matter of question. Now if we see that there is a transaction of services, let's say that I am rendering a service from Mumbai to a person in United States of America, then in that case what happens is I need to see what type of service it is, and if the service is getting consumed outside the taxable territory, then precisely I need not collect the tax on that. We follow a principle of export the goods and not the taxes, or export the services and not the taxes along with that. Now, what is the rationale behind this? Understand. Indirect taxes are borne by us on the goods and services that we consume for the reason that these taxes are going to be getting back to us by way of some facilities or some amenities which are provided by the government. Now, if I give a service to a person in United States of America and if he is going to bear the indirect taxes, tomorrow Indian government in any case is not going to do anything whatsoever for that person in United States of America. So if he pays the tax in the manner of indirect tax, he is not getting anything in return as well, and therefore it doesn't make sense to pay the tax. And that is the reason why globally this method is followed, that whenever goods and services are getting outside your taxable territories, don't charge tax on them. That is a simple principle. Now then, if there were already rules to deal with this, why was the need to bring in place of provision of services rules? Now the very reason is that there are certain transactions which had a probable existence in taxation area but which were not getting actually covered due to the constraint that was set up in the rules. Like if I would say that there is a person Mr. X of Mumbai, there is a person Mr. Y of say Delhi, and Mr. X wanted to construct a hotel which was for Mr. Y of Delhi, but the hotel was located in Dubai. Now what used to happen was that since the hotel was in Dubai, it was considered that the service consumption is taking place in Dubai and therefore the service was not charged to tax. Now place of provision of services rules, when we see now in our journey, we will see that there is one rule 8 which says that whenever the service is provided by a person staying, or he is a person who is a person belonging to the taxable territory, the person who is consuming the service, even he belongs to the taxable territory, the only thing is that the service is consumed at the place which is not in the taxable territory. But for this case, the rule 8 says that the service will now be taxable under the place of provision of services rules. So my dear friends, this is how the place of provision of services rules are there, for the reason that certain transactions which can be brought under the ambit of service tax, which were earlier not covered under the ambit of service tax, are to be considered now. So based on the same, we'll begin our journey about understanding the place of provision of services rules. Now as we can see, the learning objectives which are covered over here, the key terms, that is some important definitions we are going to understand about these place of provision of services rules. Now if we see, these rules came into effect from 1st of July 2012. Charging section 66B, services provided or agreed to be provided in the taxable territory would be liable to service tax. Now this definition of service was introduced. You might be knowing that it was for the first time that the service word was defined by this charging section. There was section 65B clause 44 which actually specifically defines the word service. So service provided or agreed to be provided in the taxable territory would be liable to service tax. Now this word taxable territory makes a lot of importance. So taxable territory means what? The entire landmass of India excluding Jammu and Kashmir plus a distance up to 12 nautical miles in water which is called as the territorial waters of India, and it also extends up to the 200 nautical miles which is called as the exclusive economic zone. So if either of the taxable territory में अगर service consume हो जाती है, then we'll say that the service is taxable. However, if the service is actually getting consumed outside the taxable territory, then we will say that the service will not be taxable. Now, some general principles about these rules. In a first case, as you can see that there is a service provider A who is rendering a service to B who is located in the non-taxable territory. Now A belongs to the taxable territory, B the recipient belongs to the non-taxable territory, and therefore what is going to happen? The consumption of service is taking place outside the taxable territory and therefore there will be no service tax charged on it. If we see the second one, that a service provider A is in the taxable territory, the service recipient C is in the taxable territory. So in this case, definitely the service would be liable to tax. The payment of tax, now as you might have learned in the IPCC, the payment of tax would be under a normal charge. That is, the service recipient is going to give the money of tax to the provider and provider pays it to the government. In the third case, if you see that the service provider Mr. D, who is located in the non-taxable territory, is rendering a service to Mr. C, who is in a taxable territory. So precisely this is what is called as importation of service. Now my dear friends, over here what will happen? Where is the consumption taking place of this service? It is taking place in the taxable territory. So service tax to aayega. Yes or no? Now what happens is, since the provider is located outside the taxable territory, Indian government cannot tomorrow go and tell Mr. XYZ of that USA, let's say that, कि sir आप भी India में registration ले लो because your service is taxable. So we cannot do. Practically it is not feasible. So what happens? We introduce a concept of reverse charge mechanism whereby the responsibility to pay the tax was shifted upon the service recipient. I'm saying the responsibility because the money is anyways going to go from the pocket of service recipient. Even he is the one who is responsible to pay it to the credit of central government. Now in this case, what happens? D is in a non-taxable territory, C is in the taxable territory, and therefore the service will be taxable. It will be charged to tax and payable under the reverse charge mechanism. Now the next one. If we just summarize that prior to 1/7/2012, there was section 66A and governed the taxability of services provided from non-taxable territory. Place of provision of services rules 2012 with effect from 1/7/2012 with the said notification. These rules determine the place where service shall be deemed to be provided. Now, as I told you in the introductory part, that even though the service, in case of, I had given you an example that X is belonging to Mumbai and Y is belonging to Delhi, and the service has been given to a person, service has been given to a person Y of Delhi, but about his hotel which was located in Dubai. Now, even though the services rendered by X were consumed in Dubai, it was meant for the person who is living in Delhi, that is the person who is in the taxable territory, and therefore it also came liable for service tax under the place of provision of services rules. So there are certain transactions which were earlier getting out of the scope of the service tax, and therefore in order to bring them the maximum transactions under the purview of service tax, these rules have been made. Now, the persons for whom the rules are relevant, the persons who deal in the cross-border services, the persons who have operators with the suppliers, operations with the suppliers or customers in the state of Jammu and Kashmir, service providers operating within India from a multiple locations without centralized registrations, and are relevant for determining services that are wholly consumed within a SEZ to avail the outright exemptions. Now these are the people who will be mainly affected with these rules. Now, service tax being a consumption based tax, services could fall in more than one taxable jurisdiction, fair possibilities, and place of provision of services rules help to determine the jurisdiction of consumption of services. So like I told you, In order to expand the horizon of the charging of tax, these rules are definitely going to make a great difference. Understand? Now there are certain important definitions in this category. Now important definitions from what perspective? Account means an account bearing interest to the depositor and includes a non-resident external account and a non-resident ordinary account. Leg of journey means the part of the journey that begins where a passenger embarks or disembarks, means passenger जहाँ पे plane में बोर्ड करता है या वहां से बाहर निकलता है वो प्लेस को बोलते हैं लेग ऑफ जर्नी. वहां पे where a passenger embarks or disembarks the conveyance or where it is stopped to allow for its servicing or fueling and ends where it is next stop for any of those purposes. Means of transport means any conveyance designed to transport the goods of a person from one place to another. Now these definitions will be useful for us in the rules that we'll be learning. Now the general rule under the place of provision of services rules is the rule 3. Now as you must be knowing friends that generally rule 1 short title extent and commencement, rule 2 you'll always find some definition, and rule 3 is talking about the place of provision of services rules. Now the general rule says what? The place of provision generally is the location of recipient of service. Now the location of service recipient means what? Wherever the service recipient is located, his address, his area, if that area is in the taxable territory, I will say that the service will be liable to tax. Rule 3, please remember, is a general rule which says the place of provision of services generally will be the location of recipient of service. And if the location of recipient of service is in the taxable territory, your service will be liable to tax. There is an implied meaning what you are trying to get out of this, which is 100% correct, that if in general sense the location of recipient of service is in a non-taxable territory, that means service tax will not be applicable. So please remember, what does rule 3 say? That a place of provision of services generally, in usual circumstances, place of provision of services will be considered as the location of recipient of service. Now location of recipient of service might be his office, registered office, his address of communication, either of it will be considered as location, and if that place is in the taxable territory, service tax will be applicable. Now there is a proviso inserted there too. In case the location of service receiver is not available in the ordinary course of business, the place of provision shall be the location of service provider. Now please understand friends, this is a proviso. This is an insertion of a proviso that if the location of service receiver is not available in the ordinary course of business, the place of provision shall be the location of service provider. But first always see the general rule, and then if it is not having, the recipient is not having a place of business, then only we are going to see this proviso. Now, who is a service recipient? Normally, a person who is legally entitled to receive the service and therefore obliged to make the payment is the recipient of service, whether or not he actually makes the payment or someone else makes on his behalf. For instance, a lady leaves her car at a service station for servicing. She asks her chauffeur to collect the car later in the day. The chauffeur makes the payment on behalf of the lady owner and collects the car. Here, now tell me who is going to be the service recipient. A lady leaves her car means she is the one who wanted to get the servicing done, so she is precisely the recipient of service. Driver or the chauffeur who is going to pay on her behalf is not a service recipient. Now, determination of location of service receiver and provider rule. Where the service receiver or where the service receiver services provided has obtained single registration, the location of service recipient will be the premises for which such registration has been obtained. In case the service receiver has more than one unit's centralized registration to be covered under this clause, means wherever his business is registered, that will be considered as place of provision of service, or that will be considered as the location of service recipient, and if it is in the taxable territory, service tax would be applicable. Now, where the service provider or the receiver is not covered by A above, then the business establishment, the usual place of residence, establishment most directly concerned, and fixed establishment. So we'll continue our discussion in the next video.